What do I think will happen? Well, I've got a bear case and a bull case, but what I think will happen is that 55% ARR goes to 50%, 45, 40, 35, 30, 25, 20. It's between 50 and 20. It'll gradually decelerate till it's growing about twice as fast as the S&P index. And at that rate, Bitcoin's $13 million a coin in the year 2045. 13 million. It could be a 3 million bear case. It could be a 49 million bull case. But what is Bitcoin? 7% of the world's assets then.
Hey guys, welcome back to Everyday Finance. In this video, Saylor discusses Bitcoin and crypto. MicroStrategy's founder and executive chairman, Saylor, proudly announced that Bitcoin had stepping into a decade-long era of a gold rush. He predicts the emergence of colossal firms such as Microsoft and Apple, who will strategically invest in the dominant digital asset as a safeguard against the devaluation of traditional currencies. It is believed that we entered this era of the Bitcoin gold rush in January, following the approval of several spot Bitcoin ETFs by the U.S. Securities and Exchange Commission, SEC. This approval granted thousands of institutional investors access to invest in the largest cryptocurrency by market cap. According to Seyr, the era is expected to continue until 2034, with numerous hedge funds, pension funds, sovereign wealth funds, nation-states, and even companies like MicroStrategy getting involved in Bitcoin. They are either directly purchasing Bitcoin or investing in it through spot Bitcoin ETFs. Seyr sees the approval of spot Bitcoin ETFs as a game-changer, indicating a noteworthy change in the regulatory environment for cryptocurrencies. The SEC's approval of Greenlight was an important milestone in addressing misconceptions about Bitcoin. It helped debunk notions of it being a magical internet currency or a tool for money laundering. The growing interest from major Wall Street players like Fidelity and BlackRock solidifies Bitcoin's position as a long-term investment opportunity in this era of the gold rush. The executive chairman of MicroStrategy believes that with the final piece falling into place, investors from all categories will have easy access to invest in Bitcoin. This final piece is the approval by regulators for banks to custody Bitcoin. Seyr believes that when this happens, Bitcoin will rapidly begin to assume its true value until its market cap is someday worth hundreds of trillions of dollars. In a recent interview with Bitcoin News, the renowned billionaire business executive discusses some exceedingly bullish predictions for Bitcoin. During the interview, Saylor gives his ultra-bullish $100 trillion prediction for the leading cryptocurrency. And lots of things Saylor discusses, so please watch the video to end and share this video, and subscribe our channel Everyday Finance. Thanks.
By the first law of money, that means you're going to last 1,000 years. The custodian might not last 1,000 years, but that doesn't matter because you can move the Bitcoin every year or every decade, and you can stay one step ahead of the custodians failing. You can't teleport a building. You can't teleport the King Ranch. And so Bitcoin is that thing that you can move. Say you custody your Bitcoin. You can self-custody your Bitcoin for about 1 basis point a year, assuming you buy good hardware wallets and signing devices and spend a day a year to keep track of it. Now you've got a 10,000-year asset. And what happens if you give it to the AI? Well, an AI or a computer program can maintain those private keys for the cost of electricity. You've got a 100,000-year asset. The AIs are going to want the Bitcoin. If they have a choice between owning the Bitcoin and owning the ranch in Texas or owning the bar of gold or owning the Argentine peso, it's pretty obvious what they're going to want, and you can see here why they're going to want it. Digital assets are in a class all their own. When you compare them to all the other assets that you can use for capital preservation, you can see they're off the scale Everything else is living in the domain of 30, 40, 50 years, and you're in the domain of 1,000 to 100,000 years. It's a breakthrough in capital preservation, but it makes it a revolution in economics. If you would be rich, trade wisely. And here's a very simple principle. Trade temporary for permanent. Trade your ice cream cone that's melting for the peso for the dollar for the land, and the land for the Bitcoin. Trade the currency for capital. Trade something fragile for something resilient. Trade something local for something global. Trade something physical for something digital. Trade the security for the commodity. Trade the commodity for the scarcity. You can't go wrong moving in that direction.
The price of Ethereum may be influenced by spot ETF inflows. In the upcoming days, investors will recall the underwhelming demand for futures products in late 2023, according to a report by a crypto analytics firm. After the launch of the Ethereum ETF in the US last year, the demand was not as high as expected. Now everyone is eagerly awaiting the launch of the spot ETF, hoping for a rapid increase in assets. In a market report dated July 22nd, Kiko's head of indexes mentions that the price of EEUM could be influenced by the inflow numbers in the coming months. Additionally, it is noted that several spot Ethereum ETFs have received final approval on July 22nd and are scheduled to commence trading on July 23rd. Kai mentioned that one of the most noticeable effects on price is anticipated to arise from potential outflows from the Grayscale Ethereum Trust, similar to the Grayscale Bitcoin Trust. ETA is a fund that provides institutional investors with the opportunity to invest in Ethereum. However, it does have a 6-month lockup period on its shares. With the conversion of ETH to a spot ETF, traders will have a more convenient way to buy and sell. As a result, it is expected that many investors who bought ETH shares will seek to cash out once trading commences on July 23rd. Like a financial analyst, the discount on ETH's net asset value has recently closed after widening between February and May. This decrease in discount indicates that traders have been purchasing ETH below par and plan to redeem these shares at the net asset value price upon conversion in order to make a profit spot on the wall. The launch of Bitcoin ETFs had a significant impact on the price in the months that followed. However, there is less confidence that an Ethereum ETF will be as popular in the crypto market. In a July 21st research report, market maker Wintermute projected that the Ethereum ETF would attract inflows of $3.20 to $4 billion in its first year of trading. However, Wintermute believes that the actual demand for the ETF will be lower, ranging from $32 to $4 billion. According to the firm's predictions, the Bitcoin ETF is expected to accumulate approximately $32 billion in assets by the end of 2024. The firm estimates that the first-year inflows into the Ethereum ETF will be around 10% to 12% of the total inflows into the spot Bitcoin ETF. Wintermute predicts that the price of Ethereum will increase by a maximum of 24% by the conclusion of 2024. Let's get back to Michael Saylor interview.
So let's talk about some great trades in history, some trillion-dollar trades. The Dutch understood naval power. They understood ships. They had thousands of them. They bought the best port in the New World for a couple of $100 in plastic and textile trinkets. And that's worth $2.5 trillion today. Okay? It was an investment that's returned 6% for 398 years straight. It's a 10.5 billion X return. And if you think about it, you're like, why would I actually give up the best port in America for a bunch of textiles and plastic and glass? But the people that sold the thing to them didn't understand naval power. If you don't appreciate the reason you're going to want the property, you won't value the property. Napoleon wanted to gallivant across the old world, and Jefferson wanted to expand in the new world. So France sells Louisiana to the U.S. for $15 million in 1803. The $15 million probably lasted a few months fueling the French army. It's gone. Jefferson got that. He got 27% of the United States. It's an 800,000x return. Worth 12 trillion or more. It'll be worth more. Jefferson had some vision, as did this man. Seward pays $7 million for Alaska 2 years after the country's decimated by the Civil War. John D. Rockefeller is trying to start an oil company. Today, there's $1 trillion of oil underneath Alaska. It's a massive return for a piece of paper. How much is digital capital worth? Take the $450 trillion, multiply by 3%. That's your entropy cost or your inflation cost. It costs the world $13.5 billion a year to take all of those parade of horribles when they're trying to preserve their wealth. If you put a 20 P to E on it, like you'd value a company or a long duration bond, that's worth $270 trillion. So digital capital is worth 10, 20, 15 trillion a year, and is worth hundreds of trillions of dollars. Reality check. Is he full of BS? Well, digital capital is returning 55% for the past 4 years. Financial capital, the best in the world, is the bond. It's minus 5%. Imagine capitalizing your company or your country on a minus 5% instead of a plus 55%. It's obviously working. And now let's come back to my chart here. Global wealth, we can look at it like this, and we see the little Bitcoin, square in the left corner. But what's happening? Here's my macro Bitcoin forecast. It's 21 years. Goes out to the year 2045. What do I think will happen? Well, I've got a bear case and a bull case, but what I think will happen is that 55% ARR goes to 50%, 45, 40, 35, 30, 25, 20. It's between 50 and 20. It'll gradually decelerate till it's growing about twice as fast as the S&P index. And at that rate, Bitcoin's $13 million a coin in the year 2045. 13 million. It could be a 3 million bear case. It could be a 49 million bull case. But what is Bitcoin? 7% of the world's assets then.
At BlackRock, the spot Bitcoin exchange traded fund experienced its largest influx of funds in over 4 days. In a remarkable display, the iShares Bitcoin Trust ETF witnessed a staggering influx of over $523 million on Monday. On July 22nd, the fund acquired 7,759 Bitcoin, valued at just over $523 million at the time of writing. This data, cited by one of the co-founders of Apollo, was revealed in a July 23rd report. Inflows on July 22nd have propelled the total assets under management for IBIT to 333,000 BTC, which is equivalent to approximately $22 billion at current prices. This surge in inflows marks the 7th largest day of record for IBIT in the United States. On March 18th, IBIT experienced a significant surge in inflows with a staggering $849 million worth of BTC added to the fund. This marked the largest single day of inflows for the company. The second largest day on record occurred on March 5th, when the fund saw an impressive $788 million in inflows. According to recent data from Farsight investors, there have been significant inflows into BlackRock's fund. Interestingly, this surge coincided with the approval of several spot Ethereum ETFs for trading in the US market. Industry analysts are predicting that these spot Ethereum ETFs could generate a substantial portion of the flows that spot Bitcoin ETFs have seen since their launch in January. Marcus Thielen, the founder of 10x Research, has even speculated that there is a possibility of Republican Party nominee Donald Trump making a surprise announcement at the upcoming Bitcoin 2024 conference in Nashville, Tennessee on July 25th. Thalen believes that Trump could declare Bitcoin as a strategic reserve asset, which could potentially trigger a significant price increase for Bitcoin in the coming weeks. Brian Seyr, the founder of a crypto asset management firm called DIM, shared a similar prediction on July 22nd. He mentioned that there is a strong likelihood of Bitcoin being recognized as a strategic reserve asset at the conference. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.